Welcome everybody. Again, as Dan said, my name is Thomas Wood. I'm the Director of Trading Operations over at ValueCharts. And today we're going to be talking about a really fun topic, which is naked trading. So before we dive in, let me go over a really quick risk disclaimer. Trader investing carries a high level of risk and is not suitable for all persons. Before deciding to trade or invest, you should carefully consider your investment objectives, level of experience, and ability to tolerate risk. This content is subject to change at any time without notice and is provided for the sole purpose of education and assistance in making independent investment decisions. ValueCharts.com is taking reasonable measures to ensure the accuracy of the information contained herein. However, ValueCharts.com does not guarantee its accuracy and is not liable for any loss or damage which may result directly or indirectly from such content from an inability to access such information or any delay in or failure of the transmission of the receipt or instruction or notification in connection therewith. Any past performance results are shown for illustration and example only, are hypothetical, and as such have many inherent limitations. No representations being made that any account will or is likely to achieve profits or losses similar to those shown. Past performance is not necessarily indicative of future results. So there we go. There's my whole TV new drug commercial disclaimer at the end type of thing. And then we're also required to show you CFTC Rule 4.41. I'm not going to read through this whole one. However, this is just saying, look, stuff that's happened in the past. Obviously, it's hypothetical. This is going to happen again in the future. There's no guarantee. That being said, I can show you some setups we had today in the trading room that we talked about earlier this morning, and we believe they work. We trade them every day in front of thousands of people, so we believe they're worth using. So these are a couple questions you're going to ask me. And by the way, I promise you I will slow down when I actually start talking about the topic. Just those disclaimers that go pretty fast so we can get them out of the way. Now everybody asks these questions, or they inevitably come up whenever I do this webinar, which is, this is great, but how do I get in? Well, don't worry. Section 2 in this webinar is going to show you how you get in. Section 1 is going to be about reading price action to determine the trend. Section 2 is entering the trend and how to minimize your risk when you're entering. So one of the things I will say is, with this, at the end of each section, I do a Q&A basically, so I take about 2 or 3 minutes, 5 minutes, however many questions we have, to answer your questions. So as we go, feel free to send them in at any time with the GoToWebinar menu. If I see something that's relevant as I'm explaining it on the chart, I'll talk about it. If it can wait till the end, I'll wait till the end. When I do the free webinar, I try to make sure I give everybody a lot of value, because you're taking time out of your day to come spend with me here. So that being said, I'm going to show you an entire strategy from start to finish how you can use it. And that way you didn't waste your time here. You learned a whole lot, hopefully. Now some of it's basic, but it's all very important to overall trading. So that being said, let's jump in with section 1, which is what is naked trading and how do you know market direction? What is naked trading? So that's the first question. Everybody's going, okay, naked trading. Is he sitting at home naked? No. Naked trading is referring to trading based on price action alone. So it's drilling down to the core of what we're doing, which is analyzing price as a technical analyst. So you do not need to have all these crazy indicators. And everything we're going to talk about today is completely indicator free. I know the outline for today said we were going to use one indicator, but we're not. We're not using any indicators. It's just looking at price action and using candlestick charts. You don't need to use any indicators to see the naked trading setups. We're going all the way back down to the basics. Almost all indicators that we use in general as a technical analyst are based on price action or volume. And then why not just learn to read the price action itself instead of having a bunch of indicators. Now the reason I put together this type of trading, and one of the reasons I'm a fan of this type of trading, is because I do mentorships, I do consultations with people, and I'll go and I'll log in on their computer and we'll look at their screen and they go, see, I just couldn't tell whether to go long or short here. And the problem is you can't even see the price action because they have 50 different indicators on there. So you don't really know what the market's doing. You just see all these indicators and you have so many indicators giving you mixed signals that you don't know what to do. You get locked. You get indicator locked. So by going back down to the basics and reading the price action alone, we can learn a whole lot about what the market itself is doing. And we can go right back down to the fundamentals of trading. Now, every major trend is going to have one thing in common, right? You cannot have one without the other. If it's an uptrend, it's higher highs and higher lows, 99% of the time, 99.9% of the time. If it's a downtrend, you have lower highs and lower lows. So the exception is a flash crash, or when the market just skyrockets or gaps. Okay, so there's nothing you can do there. But a trend, by definition, an uptrend is higher highs and higher lows. Now when I say higher highs and higher lows, I'm not referring to one candle in relation to the previous candle. I'm referring to pivots. We want to have a series of higher high and higher low pivots for an up moving market. For a down moving market or a downtrending market, we need to have lower high and lower low pivots. All right. Now once you understand how to identify the trend patterns and what pivots to pay attention to, the overall direction of the market, you can catch a move and you can stay in it for a much larger move. So one thing I tell everybody is, okay, as a trader, we want to have at least a 2-to-1 reward-risk ratio. Okay, this is, if you don't learn anything else today, this is the most important thing to learn. Have a minimum of a 2-to-1 reward-risk ratio with your trading, meaning for every dollar that you risk, you want to have $2 in profit. The reason we do this is because if we have a 2-to-1 reward-risk ratio, we only have to be correct on our trades 34% of the time to make money. Now we can be correct a heck of a lot better than 34% of the time. You can almost do that throwing a dart at a dartboard. But when you're trading, if you have a 2-to-1 reward-risk ratio, you're in profitability, statistically speaking, as long as you're correct 34% of the time. And anything better than 34% of the time, or anything better than 2-to-1, that percentage you have to be correct goes lower, and the number of trades you can place to be profitable goes lower. So you can have, with a 5-to-1 reward-risk ratio, you have 4 losing trades and 1 winning trade, and you're still positive. Okay? One of the good things about trading a trend is you can get reward-risk ratios of 10, 20, 30 to 1. So you can get some massive reward-risk ratios if you're trading a trend. Now, I personally, I'm going to go ahead and say it, I'm not a trend trader, so I don't normally stay in for trends 90% of the time. I normally am going for a 2 or 3-to-1 reward-risk ratio because I day trade. However, if you want to catch bigger moves, you can go for the bigger moves, and I'm going to show you how you do that. You can also apply this type of trading, the setup I'm going to talk about, the way of trading, you can apply it to any time frame you want, whether that be intraday or end of day. So if you're a day trader, don't sit here and go, well, I'm a day trader, he's going to show some swing trading trend following setup. No, I'll show you some trades from today where the setup was intraday and the target was intraday. Okay? All you have to do is adjust the time frame you're looking at, because there can be downtrends within an overall uptrend. So you could have a 5-minute downtrend or a 1-minute downtrend while the overall market is still heading higher. And you can still trade that downtrend on the 5-minute chart within the context of an overall uptrend. Okay? So the trend is dependent upon the time frame you are analyzing. Now if you're having a hard time finding the trends, this is one thing that happens a lot of times as well. Traders will, they're looking at their chart and they go, I just can't see it. I don't see what's happening. Well, when I look at their screen, it turns out that they're zoomed in and they can only see 50 price bars or 30 price bars on their screen. So you can't see enough of the information. So one thing you need to make sure you do is you zoom out, compress your chart a little bit so you can actually see the big major pivots we want to be paying attention to. Literally, one thing you can do is stand up, compress your chart, stand up, and take a step back from your computer. Is the overall trend up or down? You should be able to see the pivots. It'll be really easy. We're not paying attention to little pivots, we're paying attention to major pivots. Now a lot of times traders get caught up in the noise of the markets, they lose focus. But the market's always going to tell you where it's going. Okay? So we don't want to get caught up on the small stuff. Pay attention to the big picture and don't forget about the underlying trend of a market. Don't worry about finding the top or the bottom. Another thing that happens a lot of times is traders come to me and they go, all right, but how could I have gotten in right here? And they point to the exact top. Or they go to the very bottom and go, how could I have gotten in right there? And they go to the very bottom. I say, well, there's ways of doing that, using candlestick reversals or using divergences, but we're not trying to do that with a strategy. Okay, we're going for that middle 80%, middle 60%. If you can take 60 to 80% of the market every move, you're going to do really well. Is the chart frozen for anybody else, or is it just for Nishrin? It should be on lower high, lower low, higher high, higher low, talking about trading percentage. Everybody seems fine. Okay. Now once you enter this type of trend following trade, you manage the stops by trailing them just behind the highest high or just below the lowest low. Pivot. So for example, this is how you're exiting. For those of you that are going to say, how do you exit? If the trend is up, okay, let's say we got long down here, then we're going to trail our stop to here after this pivot, then we're going to trail our stop to here after this pivot, we're going to trail our stop to here after this pivot, and then when it finally comes back down and breaks the previous swing low, that's when we're going to exit, because we're no longer trending up, because we no longer have higher highs, higher lows. We're either consolidating or reversing. Make sense? So by trailing our stop this way, this guarantees we stay in a trade as long as the trend continues in our direction. If a previous high or low pivot is broken, then the market's entering consolidation or reversing, and we don't want to be in a consolidating market or reversing market. All right? So this is what I mean. This is an example of crude oil. This is crude on a daily price chart. And this is what we're looking at. Here's a high, here's a low. Then we have a higher high, and we have a higher low. We have a higher high, and a higher low, and a higher high. Okay? Then we come down, we break the previous swing low. So now we're in a downtrend. Well, we're out there consolidating and reversing. So now we have a lower low. Then we bounce back up. We're still not in a downtrend until we put in a lower high as well. So as of about this point right here, once we bounced up and then started to roll back over to the downside, now we can say, all right, this is a lower high. So lower high plus lower low equals downtrend. So as of that point, we are now in a downtrend. We have a lower low and a lower high and a lower low. And this one here actually barely poked above the previous swing high. Okay, so you actually had a higher high here. The problem is, for it to reverse trend, it needs to come down and put in a higher low. It does not do that. It just came down and put in a lower low and lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low. So from there on, we're in a downtrend, except for this little bit here. This is considered consolidation. That spells consolidation. If you can't read my handwriting. All right. So going forward, what I've done is I've marked all these charts. Now this is, a lot of people get this confused that it's an indicator. It's not an indicator. I went through and manually put in these lines to show you the highs and the lows. Okay. These are showing the major pivots. When you do this, it's a lot easier to see the chart. Now, by the way, I know one thing you're going to say is, well, it's really easy to go back and look in retrospect and see where a market went and say, well, there was the uptrend, there was downtrend. Yes, I understand that. At the end of the webinar, we'll pull up some live charts. We'll pull up charts from today. I'll show you some of the stuff we pointed out in the trading room today as well for trending markets for these types of entries. All right. So this is what it looks like. Remember, uptrend as of this point right here, downtrend. Now, one thing you'll notice back here, our pivots, we're looking at these really big pivots, okay? Over here, we're looking at much smaller pivots for our highs and our lows. All right, why are we looking at much smaller pivots over here and much larger pivots over here? Well, the reason we do that is because over here on the right side, this market is moving. I mean, it is moving fast. So when we have a drop from 90 down to 80 in a matter of a week, that market's moving really fast. So we don't want to be going, okay, well, here's a previous pivot, and then waiting and never have another pivot to trail our stop. So the faster the market moves, the faster we will consider a pivot a valid pivot. When a market's just slowly moving higher and lower, we're ignoring these types of things. Okay? But when you have these major moves that on a major breakout, then we're starting to look at the smaller pivots. All right, so here's another example. This is Tesla on a daily. And again, you can use this type of strategy. It's the fundamentals of trading. This is a daily price chart. You can use it on stocks, on futures, on forex, whatever you want. And I'll show you examples of all the above. You can use end-of-day and intraday. Okay, but right now all we're talking about is just understanding the trend, because I want you to understand the fundamentals, the basics of a trend. Then we'll talk about how to enter with lower risk. So here's a high, okay? This was a previous low. So low, lower high, lower low. So this is actually a downtrend right here, okay? This is considered a downtrend. When we bounce up, we put in a lower high, and they come down, and we put in a higher low. And then as soon as we break this lower high here, so as soon as we go up and go above there, now we're looking at a higher low and a higher high. Okay, we go higher high, higher low, higher high, higher low, higher high. Then we come down. As of this red line here, we break and put in a lower low, so we're either consolidating or reversing. So here's our lower low. Then as of this gap down right here, we now can say, okay, we have a lower high as well. So lower high plus lower low equals downtrend. We have a lower low, and a lower high, and a lower low. Yes, I do realize these are really big swings, but we're looking at overall pivots. Okay, we're not looking at micro. We're not looking at short term. We're looking at the big pivots. So we're looking at the major trend. This will give us directional bias in our trading. Here's another example. This is in forex. This is the cable, or the pound dollar, also known as the cable. This is again on a daily price chart. And this trend, by the way, is over now. But you can see here's a low, and then a high, and then a higher low, and a higher high, and a higher low, and a higher high. And then we come all the way down, and we break this low here. Okay, now we have consolidation and reversal. So now we are either reversing or consolidating. This puts us down with a lower low. And then remember how I talked about that when a market is just running in one direction or the other, we look at the small bounces as opposed to the big bounces. Well, here's a small bounce. We had about 4 or 5 days that went up. Okay, so here's our lower high, and then as of this point here, we're now in a downtrend. Now we have a lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high, and on down it goes. Okay? Pretty simple stuff, but very important to understand how this works, and then we're going to talk about entries here in just a minute. So this is gold. This is intraday on a 30-minute chart. So the 30-minute gold chart. So here's a low, and here's a high. Now, this is a higher low, and this is a lower high. So, since the definition of an uptrend is higher highs and higher lows, the definition of a downtrend is lower highs and lower lows, anything that takes place within the previous swing high and low is considered consolidation. So here's the previous swing high and low, this area, and these two pivots are inside of the previous swing high and low, which means we're in consolidation. What do we do when that happens? We draw trend lines for our breakout. Now, these trend lines aren't perfect because I'm drawing them by hand, so it's not really that great, but now we have a pennant pattern. All right, now what happens when we break out a pennant? Well, right here we break down. So this means now we have a lower low, and this becomes a lower high. So now, as of this point here, when we broke down, this is now a downtrend. Then we bounce back up, put in a lower high, go back down, a lower low, bounce back up, put in a lower high, come back down, put in a higher low. So we have a higher low. What do? We can draw a trend line. If it breaks a trend line, we can enter short again. However, it does not. Instead, it goes back up and breaks the previous swing high, which was right here. So now we have a higher low compared to this low, and now we have a higher high. What does this mean? Higher low plus higher high equals uptrend. Higher high, higher low, higher high. Okay? So it was downtrend all the way over till here, and then it was uptrend from here on up. Make sense? Here's another example, intraday. This is Apple. This is on a 5-minute chart. So here's a low, and here's a high, and here's a higher low and a lower high. What's that mean? Same thing that we just had in gold. Consolidation. What do we do with the consolidation? We draw our trend lines. Now we have a pennant pattern. Here's our breakdown. So now we have a lower low and our sell entry. Stop goes above the high. And again, I'll expand on what I was saying about sell entry here in a minute in the next section. Here's a lower low, a lower high, lower low, lower high, a higher low, and a lower high. There's our trend line. Here's our other trend line. Here's your sell entry. And a breakdown to continue the trend. Lower low, lower high, lower low, lower high, lower low. All right. Now this is all considered a downtrend. One thing I will say, this right here, you could have been drawing your trend line. All right. It gapped through that trend line a significant amount. Do not go and sell that gap, okay? Because you run the risk of selling right at the bottom, and then it comes and has a gap fill. We don't do that. We only sell on a trend line break if we can basically watch it go through the trend line. If it gaps through it by just a couple ticks, okay, that's fine. But if it is gapping way down through it, we don't do that, okay? But here we have a lower low and then a lower high, still in a downtrend, and a higher low, so we draw another trend line here. And then right here, we break to a higher high. Okay, so now we have a higher low plus a higher high. Now we're in an uptrend, higher high, higher low, higher high, higher low, higher high. So this, by the definition of a trend, is a downtrend. This, by the definition of a trend, is an uptrend. Pretty simple stuff, but very important and something that is oftentimes overlooked by everybody. So that being said, any questions about the definition of a trend and understanding how we're looking at pivot points? We're not just necessarily looking at one bar in relation to another. So we're not going, this is an uptrend because these bars are going up. No, no, no. We're going, this is an uptrend because our pivots are pivoting higher highs and higher lows. Okay? If there's no questions, then what we can do is we will move on to the next section, which is talking about micro trends. Do you pick your pivots from weekly charts? You can use a weekly chart, but no, we're looking at pivots based on a number of bars. So we're looking at like a 5 to 6 bar pivot. So we want to see a bounce back 5 or 6 bars. So we want to see a highest point and then have 6 bars have lower highs. That becomes a pivot high. And the pivot low is 6 bars have a higher low. Okay? So next section, now is when we talk about stop placement, entries, exits. So this is when it gets interesting. Now you're looking at that and you go, okay, well that's great, but how do we enter that trade? And I don't want to be placing my stop all the way down at the bottom of a huge swing like that. You're correct, neither do I. That's too much risk. We're not trying to have a lot of risk with our trades because we want to maximize that reward-risk ratio. So how can we do this? Well, you can either drill down or you can be very precise with your entry. So we want to pick a very precise entry point with our trades that'll get us into the money very quickly. So how do we do that? We use a micro trend and we use a breakout, also known as consolidation breakouts. So now that you know how to identify a trend, the underlying trend, you'll start to see micro trends or miniature uptrends within the context of a major downtrend, or a miniature downtrend within the context of a major uptrend. The micro trends oftentimes give us great entry opportunities to jump back in when a major trend resumes its original direction. So when we're looking at micro trends, you know how I was just saying we're looking at 5 or 6 bar pivots for the major turning points? Well, the micro trends we're looking at 3 bar pivots or 4 bar pivots. Okay, so smaller. Now let's find a smaller pivot point. These micro trends are also consolidation periods. Okay, what we're trying to do when we are timing our entry with a consolidation breakout or with a micro trend breakout is we're trying to get in on the trend as soon as that trend starts to resume its original direction. So if it's an underlying or overall uptrend and we're getting a rise that breaks out of the consolidation period, then we're looking for that market to run our direction right away, because when they break out of consolidation, markets move because they've been, as they're consolidating, it's like a spring getting compressed and compressed and compressed, and then finally it breaks out and it shoots. Okay? When you see a short-term series of higher high or of higher low, higher high in the context of a major downtrend, draw a trend line connecting the lows. When the trend line is broken, you enter short. When you see a short-term series of lower high, lower lows within the context of a major uptrend, draw a trend line connecting the highs. When the trend line is broken, you enter long. Now, general rule of thumb, when you are drawing an up trend line, so if you're looking to go short, when you're looking to go short, your trend line should be angled up, okay, just like this. So when we're looking to go short, our trend line should have an upward angle. Why do we do this? Because we want to see the market have come down like this and then bounced off it. We need to connect at least 2 pivot points, okay? We need to connect at least 2 pivot points. If we can connect 3 or more, that's a better trend line, okay? So the more pivots we can connect, the better, but we need at least 2 pivots to connect. And we're not, again, we're talking about pivot points, not just one bar in relation to the next. We need to see 2 well-defined pivots. The reason we do this is because when it breaks down like this, so let's say we're selling on the break, we now have this much room that the market is okay with going to. It's been there before. So we're expecting it to at least come down and test the support. And once that happens, we can then move our stop to break even. The problem is if we have a downtrending, a downward angle trend line, and we're trying to sell on a break of the support, now we're selling on the lowest low. So the market is hitting fresh lows as opposed to territory it's already been in. Easier for a market to go where it's already been than it is for a market to hit a new high or a low. Okay? Same thing goes for a long. If we're trying to go long, we want to have a downward angle trend line. So downward angle trend lines for longs, upward angle trend lines for shorts. Same logic applies. We need at least 2 pivots. The reason being, when it breaks, we have at least this much room for it to get to. All right? So let's go ahead and see what this, I'll show you what this looks like on the chart. So going forward, what I've done, we had the white line showing the major pivots. The blue line is the micro pivots or the micro trend, and the yellow line is the trend line for the entry. So this is that same crude oil chart on the dailies. Remember, as of this point right here, we were in a downtrend, which means we have a bearish directional bias, which means we want to be selling as opposed to buying because the overall market direction is down. So we take a look here. This is our upward angle trend line connecting this pivot and this pivot. So pivot 1, pivot 2. Here's our break. Now where does our stop go when we first enter? We have two different options. Ideally, we want to be putting our stop above the previous swing high. Okay? So this is stop 1. That's the ideal location. Now, this is $5. That's or $4 basically. That's a whole lot more than I want to risk. That's $4,000 contract. Now again, keep in mind you're looking at a daily price chart here, so you're catching a daily trend, which means your reward's going to be much higher. Day trading, intraday, when we're trading in the trading room, we're normally looking at less than $200 contract and stop. Okay, but when you're day trading or trading off a daily price chart, your stop's going to be a little bit more. Either way, stop opportunity 2 is above the previous bar's high or above the current bar's high. So this bar is the breaking bar, that one right there. The high of that bar is right here. So we go right above that high. Okay, stop 2. Now we're in the trade, market's selling off. We should be getting in the money within just a couple of days on a trend line break like this, and it should not, ideally, it's not going to come back up above this trend line. It should stay down below it. All right, now there's some exceptions to the rules, which I'll talk about eventually, but here's our short, here's our stop, here's the market starts to run. How do we manage the stop? How do we exit the trade? Well, you have a couple different options. As I said before, I personally go for 2 or 3 to 1 reward risk. If I'm trading with the trend, I'm going 3 to 1. If I'm trading counter trend, I'm going 2 to 1. So 2 to 1, or this would be with trend. So this is 3 to 1 reward risk would be right about down here, because it's 3x whatever your risk was. So if this was our risk, this distance, we go 1, 2, 3. Okay. Now what happens here? We have another consolidation period, because this is a higher low within the context of a downtrend. So we have a higher low pivot within the context of a downtrend. We can now draw a trend line that's angled up across the lows. Where's our entry? Right here. Where's our stop? Stop opportunity 2. Stop opportunity 1. Okay, depends on how much you're willing to risk. Here's our breakdown. It bounces back. Now once support has been broken, it now becomes resistance. Okay? Once support has been broken, it becomes resistance. Once resistance has been broken, it becomes support. So you see here, this was our trend line. We broke through the support. Now it's resistance. We bounce right back up, test it. It's called a last kiss or a retest. We test it, and then we go back down again. Okay? So here's our short. Stop or stop here. Here's a run. And we have another micro trend. Low, high, higher low, higher high. This is a micro trend because these are not major pivots, these are minor pivots, just lasting a couple days at a time. Major pivot, last major pivot was all the way up here. How would we have reversed trend? If it had come all the way back up and broken this high up here and then put in a higher low. Then you would have reverse trend. But this is a micro uptrend with an upward angled trend line. Here's our entry short. Stop. Continuation. Okay? Pretty simple. Here's another example. This is that Apple chart, same one we were looking at before. It's on a 5-minute. So remember, trend was down ever since we broke out of the consolidation up here. So this is downtrend. Here is a pivot, a micro pivot. So we have 2 pivot points now. We can draw a trend line. We sell in the break. This is what I mean. When you go intraday, your stop gets much closer. There's your stop. There's your short. Your 2 to 1 or 3 to 1 target would have been right around down here or right around down here. Okay, then here again we had another higher low pivot, but we still, overall, we're in a downtrend. The major pivots were still lower highs. Okay, here's our entry. Stop is either above current bar or previous bar's high. Now, when we're looking at this, one question you're probably asking, well, do you enter on the break or do you wait for the bar to close? You enter on the break. Now, you don't enter as soon as it breaks. You let it get through the trend line. Make sure it's actually through that trend line by a few ticks. But we don't want to wait for the bar to close, because if you wait for the bar to close, and then this type of thing happens. Okay, and now instead of having an entry right here with this much risk, we now have an entry down here, and we just tripled our risk. So we're entering when we could have been taking first profit target at 2 to 1. Okay, so we enter as soon as it breaks, as long as it is definitely through the trend line. So here's another one. Again, trend is still down because we have the lower highs, lower lows. Here's that uptrend. Now, what did I say before? You do not sell on the gap like this. Do not sell here. That's a no-go, even though it broke through the trend line, even though it was a good micro trend. Reason being, you run the risk of selling at the low, and then it fills the gap. And also, by the way, this right here, if you had been watching it, was just a textbook hammer, perfect for reversal. Then we come up here and we reverse. So remember, as of this point here, we're now in an uptrend. All right, we're coming up, coming up. Here's our entry. High, low, lower high, lower low. Micro trend, these are not major pivots. This one ends up becoming a major pivot, but at the time, these were just small pivots. Okay? Here's our downward angled trend line coming across the 2 pivot highs. Here's our entry. Here's our stop. Or right down here. Here's the continuation. Okay? Can we jump in on a smaller time frame to decide when to trade the break? Yes. So you can look at for example, we could look at this daily British pound daily cable and say, all right, overall trend is down. We're getting ready to break that trend line. I still don't want to have that much risk, so I'm going to go down and find a 5-minute downtrend to jump in on. And now you just minimize your risk with the 5-minute chart because you have a very precise entry, because the shorter the time frame you have, the more precise and exact your entry is going to be. However, the shorter the time frame, the more false signals you'll have. But what that does is now we have an entry where we can risk 10 pips or 15 pips and take out a reward of 1,000 pips. Okay? That's what I was saying. You can really get, when you trade these correctly, you can get some very, very significant reward-risk ratios. What about historical support resistance levels that you formed on the way down? Do you not pay attention to them? No, you absolutely do pay attention to them. Those are very important. This is the first test to see how strong it is. So remember, if we sold here, for example, and our stop was right up here, this right here is the distance the market's okay with traveling because it's been there before. This low right here is going to be the first test because that's going to be support. And it needs to break that. If we see it come down and hit that and reverse, we can go ahead and close the trade, or at least move our stop to break even. No, Carol, I think everybody else is good with sound. So this is that cable again, British pound US dollar on a daily. By the way, the reason I show so many examples, they say you're supposed to show somebody something 7 times before they actually remember it. But here's, remember, this was an uptrend over here. We didn't reverse to a downtrend until over here. All right, so here's a downward micro trend. Major pivots are still up. Here's our trend line. Here's our entry. Stop goes here or here. All right, this is another example why you don't enter on the close, because then you're getting long right there and you just doubled or tripled your risk. There's our up move. Okay? Here's another one, micro uptrend. So it went up and then pulled back for 2 days and then up for 3 days and then down for 2 days and then up for 2 days. Draw your trend line connecting those lows. You connected 3 lows there. Upward angled trend line. Sell and break. Stop above the high. Here's the run. Same thing here. Here's a low and a high and a higher low and a lower high. Upward angled trend line. Sell and break. Here's a continuation. And here recently, by the way, we've had some major trends going on in a lot of these markets that have worked incredibly, incredibly well. Here's another example. This is the dollar yen. Dollar yen, this is on a 15-minute chart. I need to speed up here. We're going to run out of time, I think. Hey, Dan, just curious, how much time do I have here? Am I going till 1:30 or 1:15? We'll plan on 1:15, and if we can get to 1:30, we'll go to 1:30. How about that? Like
Thomas, we have until 1:30.
Live charts as long as we have enough time.
Thomas?
Okay. Thanks, appreciate it.
Okay.
All right, good deal, thank you. So, all right, remember the ins and the downtrend. Here's our micro uptrend because we have two pivots that are put in higher lows within the context of an overall downtrend, so we can connect all three of those. Upward angle trend line, sell in the break, stop at the high. Here's continuation. Now here, all right, this one gets tricky, this one right in the middle. This is actually a trend reversal because these are pretty major pivots, okay? Here's a low, a high, a higher low, a higher high. I would have been going, okay, we reversed trend to an uptrend. However, when we came down and did this right here and pivoted off this trend line one more time, so now we have three pivots and then we could not break to a new high, that's a major sign of weakness, okay? It should have rallied if it was going to go. And instead, it broke the trend line, so you can still sell because this is a really significant trend line. You have one major pivot, two major pivots, three normal pivots. So worked out really well. There's your short, here's your stop. Here's a continuation. Same thing here, low, high, higher low, higher high. There's your uptrend, upward angled trend line. Here's your short. Here's your stop. Okay, is a tick and a pip the same? No. Well, ticks are, people use ticks in futures trading a lot. You call it a tick. For forex, you call it pip. And there's pipettes as well. Does this trade style work on any time frame and any instrument? Yes, it does. So before we move on to do questions about that, this is what we have for you today. If you go to ValueCharts.com/naked, you can get the naked trading workshop. If you think this was good, and this is just the tip of the iceberg when it comes to trading naked, so trading just off of price action alone. This workshop, it's not going to be something where you come in and you go, okay, now that you come to the workshop, come buy all these indicators, because there's no indicators involved. Okay, it's just come and learn how to read price action. It is a great fundamental basis for any type of trading that you do, learning how a market behaves. Today it is $297 for the Win Vesting Special. Just go to ValueCharts.com/naked. If you heard me talk about the trading room and you want to join us in the trading room, go to ValueCharts.com/go, G-O, and you can get a $7 trial for an entire month. You can come to the trading room, both the equities and options trading room and the futures and forex trading room, which I run. So you can come join us there, $7 for an entire month. You'll get access to all the platinum membership benefits. Now, again, ValueCharts.com/naked, $297 for the Naked Trading Workshop. It's on demand, so you can watch it whenever you want, wherever you want. And it is 3.5 hours long, I believe, something like that, 3.5 hours long. If you have trouble ordering it, if you need help, go to support@ValueCharts.com, and men will be happy to help you out there. Support@ValueCharts.com. Now, this is what some people that have taken the workshop have said. Thomas, I want to let you know how much I appreciate your Naked Trading Workshop. Learned how to recognize and apply the foundational principles of raw price action is extremely powerful. The techniques you shared have already made quite an impact on my trading. Many thanks, Rich B. I want to thank you for putting together the Naked Trading Workshop. After reviewing it several times and testing the concepts the last 2 weeks, I really think it has helped me to simplify my entries and give me a clear rules-based approach to help eliminate the hesitation I have struggled with. This is the 5th workshop of yours I've attended. I think it's your best work. This is one I think everyone should start from and build on. Thanks for your help. Dale C. I mentioned this to other traders. Naked Trading Workshop, in my humble opinion, is, as you said, the basis for everything in trading and should be the first class that any new trader should learn. A must. I see everything more clearly, and I believe my trading has dramatically improved. In small account, I have more than doubled the amount utilizing that which I learned in your workshop together with your incredible trading room callouts. Once again, thanks for all you do. Now again, it's $297, ValueCharts.com/naked. The thing about it is, it's $297. You can make that in 2 minutes potentially trading. I mean, that's nothing. So, by the way, this is what's in the workshop. There's what is a high-low and a low-high reversal. This would have made you a bunch of money today in the S&P and the Dow and the NASDAQ. Worked incredibly well. Highest probability channel breakouts. So how do you know when the channel is forming? How do you know which channels you want to trade and which direction you want to be trading them? Trends and microtrends. How to skip the false signals. So you're going, okay, this is great, but how do we skip those false signals? Because sometimes you have a false break. Well, talk about that too. Consolidation patterns. Which way will they break? So when you see a market going to consolidation, which direction for a breakout has a higher probability? Entering on second breaks. When is the market running stops? Why indicators are clouding your judgment, and a whole lot more. So, ValueCharts.com/naked. You can go ahead and get that now. It is $297. If you want to come to the trading room for a month, we'd love to have you there. Feel free to ask a bunch of questions there as well. ValueCharts.com/go. It's only $7. I mean, that's a happy meal. So let's see. Questions. Does TradeStation draw major pivots and minor pivots? Bill, you can set up a pivot indicator on TradeStation to do that if you want. Does this trading style work on any time frame and with any instrument? Yes. Well, essentially any time frame. I mean, I wouldn't necessarily go and trade like a 5-second chart or a 30-second chart. That's really short, unless you're just scalping. This is a tick and a pip the same. Nope, already answered that. Do you trade micro trend against the major trend? You can, but Roland, why would you want to trade against the major trend when it's easier to trade with the trend to get a better reward risk? I mean, there's ways of trading counter trend, but you're making it hard on yourself. You don't need to do that. Do you have lifetime access to the workshop? Yep. Once you get it, you can watch it 500 times if you want. Like I said, it's 3.5 hours long, though, so that's 1,500 hours plus of watching me talk. Do you get a recording of the workshop after you ordered it? Yep. As soon as you order it, you'll get access to the on-demand version. You'll also get a copy of all the slides from the workshop. Do you get a recording of the workshop? Yep. What type of chart do you use for E-minis? You can use a 5-minute chart. Kala, I'll show you some stuff, and I'll show you some stuff from today, and then also in the workshop, there's a strategy that works really well on 30-minute charts that we made you, like I said, a bunch of money today in the S&P. What hours is your trading room open? Do you trade all day? Deborah, I trade every day of the week. So Monday through Friday, the futures trading room is open from 8 a.m. until noon Eastern. 8 a.m. until noon Eastern. How much is the trading room after the first month? I believe it's $197. Don't quote me on that, though. It may only be $97. So I don't know. I don't remember because I know they were increasing the price. So I think it's $197 a month after that. Do they call it trades in trading room and have a record? Yeah, I call it trades in trading room. I can't share a record because I'm trading accounts for individuals that do not want me to share information. You're confused. $7 to $297. If you want the workshop, the Naked Trading Workshop is $297. Okay, that's ValueCharts.com/naked. If you want to come to the trading room, for the trading room, well, this is the worst R I've ever drawn in my life. For the trading room, it's $7 for an entire month. Can I show you what we would have done in the S&P today? Yeah, we were shorting the heck out of it, and I'll show you here in just a minute. How big of an account do you need to trade? Brad, I cannot legally answer that question. You can go talk to your broker, ask them. If you want, I mean, there's traders in the trading room that are trading $5,000 accounts. There's traders in the trading room that are trading $5 million accounts. There's some in there that are managing $500 million. So it depends. Hours of the trading room are from 8 a.m. until 12 noon Eastern, unless you're trading the options and equities, which is from 9 a.m. until 1 p.m. Eastern. What markets are traded in the trading room? In the futures trading room, if you trade futures, I guarantee you we trade one of the markets you trade. The only ones we don't trade are, for example, today we were trading crude oil, gold, S&P, NASDAQ, Dow, and coffee. Do I incorporate Elliott Wave? You can use Elliott Wave. I don't sit here and go, this is a 1, 2, 3 correction or ABC or anything like that. I mean, I'm familiar with Elliott Wave, but I use my own analysis for entries, not Elliott Wave. You think you just proved to me how to actually trade without indicators? Yeah, John, you can do it. I mean, that's why I say a lot of times indicators just cloud your judgment more than anything else. Because you look at Euro US dollar. Now, by the way, that being said, I trade with indicators, okay? I'm not sitting here down talking indicators or anything like that. They are worth it. They help us see things you wouldn't otherwise see. What I'm not a fan of is 50 indicators on one chart where you can't actually see the price action. Does a $7 trial include access to both futures and options in forex? Yes. How much of the time is your room focusing on futures since I'm not interested in forex? 99% of the time, Rob. We talk about forex swing trades. That's it. And it only takes about 30 minutes to go over forex, if that, per day. Now we trade futures on currencies all day long. Are you still working on an indicator to do this for you? Yeah, I thought about it, Earl. How long on average are you in a trade? Deborah, if it's a day trade, I'm normally in it for maybe 5 minutes, if that. Because when we're getting in with the momentum and with the price action correct, it moves our direction very quickly. So here, let's do this. I'll pull up TradeStation. This, by the way, is crude oil. So you want to see what this looks like. This was today. These are trades that we had in the trading room today. Worked out really well. So underlying trend here is down, right? This was the announcement. This was a petroleum status report. We rocketed higher, okay? And then what happens here? We broke and put in a new lower low and then a lower high, all right? And here's our trend line, because here's our two pivots, upward angle trend line. Here's a trend line break. There's your run. This is what I mean. When you're intraday, why I said we're only in it for about 5 minutes if the trade plays out correctly. This is why, because you get in and there's $200 or $300 profit, just like that. Here's another one, micro uptrend, major downtrend. Here's your trend line. You hit it once, you hit it twice, you hit it 3 times. Here's your break, there's your run. If you were trading this and you took the original short right up here and you were trailing your stop behind each high, so you go high and then stop here and then stop here and then stop here and then stop here, and you'd be out. Not a bad trade. And this is what I'm talking about. So here you're entering at 87, or let's say you're entering at 86. Your stop is going up at 94, either 94 or at 02. So you're either risking $80 contract or 120 contract, roughly 140, something like that. And then your reward is from 86, or let's say 85 even, comes all the way down to a low before it bounces again at 36. So that's $500 contract. Same thing here. You're selling at 45. Stop is up here at 60. So $150 a contract in risk. Target would be $300 or $450. Either one you hit both targets. All right, you want to see the S&P today. So this is a 5-minute chart. This is what we had in the S&P today. There you go. There's your trend line break. There's your sell-off. And what did we just have here while we were actually in the webinar? What's this? A micro uptrend, because here's a high and here's a pivot. It's a higher low pivot. But trend is down because we have lower highs overall. Here's your break. Here's your run. Not bad at all. This was yesterday. You want to see we nailed the absolute high in the S&P yesterday perfectly. Well, not the absolute high, I guess. Right here. This bar, we said it was a sell. Oops, not that one. This bar right here, we said it was a sell. Why? Trend is down, okay? We bounced, and we had a textbook shooting star on a 5-minute chart. S&P just fell through the floor. Here's your micro trend. There's your break and your continuation. Not bad at all. Same thing here. Here's your break. You've hit it once, you've hit it twice, you've hit it 3 times, you've hit it 4 times. Really well-defined trend line. There's your break, there's your run. That was during the middle of the night, though, for those who trade Asian session. Is the options equities a different trading room? Yes. Now that being said, I cover equities in the futures trading room at 9:15 every morning. We go through and do an equities review. This is a trade we have been following that people were closing today. What? It wasn't personally. What market is it? What am I doing? What am I doing? Baidu. That's what it was. So here's Baidu. Here was the trend line. Here, I'll do it on the candlestick chart. So this is, by the way, this is what my charts look like. Okay? Like I said, I use indicators. I'm not sitting here bashing indicators or anything like that. I'm just saying you can trade without indicators. If you want to learn how to trade without indicators, it's right here. This is on daily, and you could do this exact same trade on the dailies. And again, we're closing this out today at, somebody was saying they were up $800 in their puts earlier today. I didn't personally take the trade because I don't trade equities. Here's your trend line. Here's your support. Here's your break. Here's your bounce. Yesterday we said if it breaks, so yesterday we said if it broke below 203.52, the previous daily low, it was a short. You broke it, you ran straight down. Here's another one. This is Facebook. This one worked out really well too. So here's Facebook. Here's our trend line. We hit it once, we hit it twice, we hit it 3 times. Really well-defined trend line. Coming down off of bearish divergence with what's called a high-low reversal. We shall learn that in the workshop. This was the sell last week. We also said yesterday was a sell on the break of the low. We said today was a cover. Why do we say today was covered? because we're sitting on top of support. Perfect. Do I use an oscillator, MACD? No, I don't use an MACD. I use one similar to an MACD called the MQ Momentum. It's kind of our own spin on MACD. Forex trades 24 hours a day. If so, when is it recommended best time to trade it? It depends, Robert, on what markets you're trading. Asian markets, it's better to trade it during the Asian session. So if you look at something like the Aussie dollar, or the Aussie Kiwi, or the dollar yen, the Asian session is normally going to have a lot more movement unless the dollar fluctuates a lot during the day. So you trade during the Asian session. Absolutely. This is one of the trades we've had in the Aussie Kiwi that has worked out incredibly well. Here's your trend line. This was counter trend. However, this was counter trend coming off of a double bottom bullish divergence. Okay, so this is using momentum to identify the bottom and the trend line to identify your entry. Here was your long on the trend line break, and that's just been rocketing higher. Yesterday we said it was a long as well, or the day before yesterday we said it was a long due to the bull flag. Which you learn that, and if you come to trader and you see we trade a lot of bull and bear flags. This is one we took the other day as well. This is euro dollar. Here's a euro dollar. Here's your micro trend. There's your break. There's your run. And here's the other one we took just a couple weeks ago. Here's a micro trend. Here's a break. And we actually covered this the day that it bottomed. I was really happy with that. Or no, we covered it the day before it bottomed. We covered it right here, like 100 pips. The reason we did was because it was going into the weekend, and we didn't want to hold it over the weekend. And this has actually worked really, really well, because it came up. This is another one coming off of a bullish divergence. It's come up off of a bullish divergence with your trend line break, and then today we said it was a buy on a break of the previous daily high. So this is called a bull flag. Up move, lower highs, consolidation, break the previous bar's high, and rally. Again, if you want to come to, or if you want to see the naked trading workshop, ValueCharts.com/naked is $297. I mean, literally that crude oil trade you could have made $2,000 on. So if you had known how to trade it, it pays for itself. Lots of people pay for the workshop the day after. I try to do my best to make sure that they're actually valid and that you're going to learn a lot of information from them. What else do you want to see? The more touches that a trend line has versus resistance, the better. Yeah, the more times it tests it, the better. What type of chart do you use for soybeans? You can use whatever time frame you want for soy. It depends on the type of trader you want to be. Are you looking at a day trading or swing trading? Here's a 5-minute soybean chart. Here's a trend line. That's correct. Yeah. Another issue I'm worried about is I'm trading with a small equity balance, which means if I trade futures, I most likely cannot hold a position overnight based on a daily price chart. How do you suggest in this case? You can trade intraday. Like I said, those crude oil trades, these crude trades, by the way, I use tick charts as opposed to time charts. I'm trading short term, except for the S&P, I watch a 5-minute. But when you're trading these trend lines, you're only in it for a couple of minutes at a time. Now, again, I can't tell you what you should or shouldn't do. You have to talk to your broker about it. But there's been lots of people that have in the trading room that have gone and doubled their accounts, starting off with $5,000. We actually did that in the trading room, doubled a $5,000 account so people could see that it could be done. You can use default Earl. No, your microtrends are not constructed on a bull or bear flag. It depends on your definition of a bull or bear flag. It depends, is what I should say. 30-year bonds. Why, I'm glad you asked, because we have torn up bonds here recently. Let me show you this, actually. So let me go back to my main where you can actually see the indicators. I'm so happy with bonds. These worked out amazingly well. We were yesterday, day before, we were covering, but look at we're breaking out. So on your dailies, all right, so follow me here because we're going to have a few different things that are pointing to bearish. On your dailies, you have a head and shoulders, left shoulder, head, right shoulder, okay, and hundreds of people took this trade and made thousands of dollars with me in the trading room, okay? So left shoulder, head, right shoulder. Look at our momentum, weakening momentum going across the head and shoulders. Perfect. Here's our trend line for our neckline. There's our break and our retest. Perfect. Then we go look at our weeklies. Look at the momentum on the weeklies. So we sold off, we rallied. Look at the momentum here. Momentum was dead. There was no upside momentum. So you had just about a textbook perfect bearish divergence. And then you sold off. We had a target of the trend line right here at 56. Perfect. And then you want to go look intraday. I'll pull back up the naked trading chart. Here's your intraday chart. This is actually the one we were watching, I think. Because well, we were looking at a couple different trend lines here. We were looking at it in a pennant at first, like this, and we said, look, even if it breaks a pennant here, it's still not a long unless it goes above the highs, because the highs are always resistance, and this is why. You break out 2 ticks and you run to the resistance. That's why I say make sure it gets through the trend line before you take the long or the short. Then you had this support level here. You had to hit it 1, 2, 3 times. There's your break. There's your sell-off. Here's your micro trend. So all this, okay, remember, because anything inside of the previous high, swing high and low is consolidation. So this is consolidation. Anything inside of this high and low. All this is consolidation. This is when we break out of the consolidation. Once we've broken out and picked our direction, now we look for a micro trend. Here's your micro trend. This one just happened here. Yeah, I wasn't paying attention because I was getting ready for this webinar. But here's your micro trend. Here's your break. There's your sell-off. Right? Textbook. It's perfect. I don't use Renko. You can, but I haven't tested it out enough to say Renko's a good one to use. I live in London, England, and trade forex. Is your trade room any use for me? Yeah, David, absolutely. We trade because what we do is we do swing trades for forex. All the forex trades we do are swing trades, unless we're trading a currency future. So you can come in at 9:15 a.m. Eastern. We do a forex and equities review. Same time we do the forex and equities. So forex and equities review. Sorry, when I start getting excited about something, because this stuff I find so much fun. This is a blast, but I start talking really fast. So if I need to slow down, just tell me, because I do it all the time. With forex and equities reviews at 9:15, they're all swing trade setups. I also post a recording of that every day in the members section. So it's a members only recording of the forex and equity setups for swing trades. Also post a video on end of day setups at the end of the day. So even if you can't day trade, we post a daily video every day with swing trade setups that you can take when you're not in the trading room. ValueCharts.com/naked for the naked trading workshop. Like I said, what we talked about today is the tip of the iceberg. There's a ton to learn about naked trading, and it is something, in my opinion, that is very, very foundational to any trading strategy you do. You need to understand how price action works. ValueCharts.com/naked for the naked trading workshop. On demand, you can watch it 500 times if you want to. It's 3 hours, 3.5 hours long, something like that. If you want to come to the trading room, you can come for a month for $7. ValueCharts.com/go for a $7 trial. If you need help with any of this, support at ValueCharts.com. Our support team will be happy to help you out. Let me pull back up the chart again. So, how do you determine where to take profits? Good question, Sal. I take profits if it's with trend, I take a 3-to-1 profit target. If it's against trend, I take a 2-to-1 profit target. So my risk, whatever my risk is, if it's against trend, I take, let's say it's had a $150 risk, then my target's going to be $300. If it's with trend, my target will be $450. This is another trade we had today in the trading room. This is gold. Okay, gold. First thing we said this morning, gold should go up because it has a bullish divergence here. We said momentum on the longer time frames are bearish, 500 tick was bullish. We had the announcement came out, that was right here, and then gold just shot up. All right, gold unable to break through the highs. Okay, so it went into consolidation. Then we had this trend line here. And then we had this support here, and we said it was a short on the break of the support. We said this was a short. with a $200 target, which would have gotten you out right over here. And then we said this was a short as soon as it broke through 1190.50. And we said the target for that was 1188. Right there. I mean, that's ideal. That's a great trade. Yes, Stephen, some do. Why not use a 500 tick when trading the E-mini 500? The S&P, for trading the E-mini when you use a 500 tick, it's not enough. There's too many bars generated, so you get too many false signals. You see, this is 1 day's price action. Too many false signals because there's so much volume. Another trade we had today was coffee. Let's see, at coffee. This was, I'm still in this. I wonder how much I'm up in that, because that's still working out really good. 1 second. Up 1,069 a contract. Already took off half profit. So this worked out really, really well. You want to see what we were looking at? Well, first off, we had shorts right over here. Well, let me try to do this better. Make it so we can actually see. Alrighty, so here's coffee. Here's your trend line. There's your short. This was the other day. Here's coffee again. Here's your trend line. Here's your short. And actually, we shorted on a bear flag on the 240s, which means we shorted on a break below 1133.30. We covered half profit. Covered half profit as soon as it came down and hit this support. We took off half here. It came back up and it stopped us out at break even right up here. Okay, this was like $400 a contract. And then I re-entered this right before this webinar, right over here on a bear flag, and took off half right about here, and the second half is still on, looking really good. But coffee is one of my favorite markets to trade. It's thinly traded, so there's not a lot of volume in it, but it is really, really fun to trade. It gets you in and out of money really fast. How many ticks with crude oil? I like using a 500 tick in crude. All right, so sorry, what are some other CF? CF, you are in a downtrend. What are you looking at? Here's your micro trend. There you go. By the way, this was textbook head and shoulders. That was really good. So yeah, CF on a daily, you're in a downtrend. Here's your uptrend line. If it breaks trend line, it's a short. Nothing wrong with that, Deborah. We have lots of trades throughout the day. We trade all day long from 8 a.m. until noon, and then normally in the afternoons I'm in the chat room talking about potential setups. When to exit coffee? Well, the thing with coffee is we're bearish coffee all the way down to the next support level down here, 25.30. So we've still got 4 more points to go. But we've absolutely torn coffee up. I mean, we've done a really, really good job of trading coffee here recently. It's just been so easy. But look at this. Here's your weeklies. For those of you that want to do position trading, same thing works for position trading. Overall downtrend, micro uptrend, here's your break, here's your run. And you can trade, if you want to do position trading, just pull out and look at a weekly chart. Or you can look at a monthly. You want to see some monthly setups? This is one in crude oil. Same exact strategy. People go, I can't believe crude oil fell this much. Well, why? Crude oil should have fallen this much. Look at what it did. This means overall downtrend. We broke the previous major swing low. This is micro uptrend or consolidation. Really what we were looking at in crude was this thing right here, like this. So you had three highs. And there's your pennant. Here's your breakout. Crude should have fallen. It was supposed to. You want to see another one that looks like this? This is one in the trading room. We did the exact same thing with this. Okay, this is the euro. Everybody goes, man, the euro's falling to the floor. Euro shouldn't have fallen to the floor. Yeah, it should have. Look, major highs. So these are major pivots. So high, low, lower high, lower low. Lower high plus lower low means downtrend. Okay? This is another lower high. This is a higher low. Yay, now we have a consolidation period for our trend line. Here's our trend line, here's our break, here's our run. Do the same thing on your weeklies. And when this was happening, when all these breaks were happening with the euro, my exact words were, this market is set to do the exact same thing when we were looking at this one right here. I said, this market is set to do the exact same thing that crude oil just did, because crude oil had already dropped like $30 or $40 or $50, something like that. So it's about to do the exact same thing that crude oil just did. Same setup, downtrend, micro uptrend, monthly trend line break. This is major. I said, watch for a really significant down move. And what happened? We dropped from 1.23 all the way down to a low of 1.04. Okay, you're talking almost 2,000 pips in a matter of 3 months or 4 months. Let's take a look at Amazon, Netflix. Sure. This is Amazon. Amazon's been really good to us. You want to know why? There's our trend line. Worked out perfectly fine. So what happens, okay? So here's a high, here's a higher low. Here's a higher high. As of here, what's happening? You're in an uptrend. What do we do with an uptrend? We draw trend lines on our pivots. Where's our pivot point? Right here. What happens to resistance once it gets broken? It becomes support. Here's our break, our rally, our retracement right back down to support, and then it gaps up off of earnings. Netflix. We did a bang-up job trading Netflix as well. Right here, actually, that's still marked. That's where the long was. Why is that a long? Well, as of this point here, so actually, Netflix has been really good to us. Here's a head and shoulders. Okay, head and shoulders pattern for your short. Here is your trend line for your neckline. Here is your short entry. Here's your gap down, consolidation. If you take the Naked Trading Workshop, you'll learn why this is a bearish consolidation. Here's your breakout. There's your sell-off. Okay? Now we come back up with reverse trend. As of over here, we're back in an uptrend, right? Because we were broken the previous major swing high. And then we come down. We go into consolidation with a bullish divergence. This ended up forming a bullish divergence on the NQ momentum. Here's our resistance. We hit it, we pulled back. We hit it again, we pulled back. We gapped through it, there's your long. We gapped again. We gapped again. Now what's happening? We're in consolidation and we're not messing with it anymore. You're out of it if you were in it. How do you know when to exit? You can exit at a multiple of your risk, or you can exit at a support or resistance level, or you can exit by following your trailing your stop behind each low. What about the Russell? This worked incredibly well. This is one we sold yesterday, sold a couple weeks ago, or a week ago, I should say. Here's your trend line. Goodness gracious, if I can draw this correctly. So here's your break. This is what's called a second break. This is well-defined trend line with a second break. If you watch the workshop, you'll understand why this is a high-low reversal right here. This would have been your entry on this price bar on a break below this daily low. Worked out really well. You're going to see intraday on the Russell. Here's your intraday Russell. We actually said this was a short right here. Why do we say that was a short? Because when we look at your 30-minute, when you look at your 30-minute price chart, Russell had sold off. Here, I'll actually just show you. 30-minute price chart, Russell sold off, bounced back, and it was right up here. This bar was getting ready to close. This was earlier in the trading room. And your momentum had just died. So he said Russell should be going back down. How do you enter? You can use a break of the previous bar's low on a 5-minute chart if you want, or you could use tick chart. Sal, I can't answer that. I get in trouble. What about corn? Corn's a good one. I got to finish up though because I have about 4 minutes left. You can see that we talk about corn a lot. These are all support resistance levels. They're old ones. Corn trend is down, right? We can all agree this is down, right? What's this? Micro trend. Here's your break. Here's your retest. Here's your run. Today we said corn should go higher due to a hammer yesterday. Corn went higher today due to the hammer yesterday. However, it hit overvalued and has what we call a no return, which is resistance. It may have also had a trend line here that's run into. Yeah, you got a trend line there. But I wouldn't want to take it long because the momentum is wrong. You want to see some micro trends in corn that played out incredibly well? Trend was down over here, right? Well, there's a micro trend. And here's a micro trend. Either there or here, either one. Both of them worked out really, really well. All right, everybody. ValueCharts.com/naked for the Naked Trading Workshop. Like I said, all the stuff I'm showing you is just the tip of the iceberg. We talk about it for over 3 hours in the workshop on how to read the price action, how to understand how it works. As I said, if you traded it today, you would have made all your money back and a lot more. If you want to join us in the trading room, come see what we do. You're going, that all looks great, but I don't believe you do it in person while the market's moving. Fine, come test me. ValueCharts.com/go for $7 trial. I hope you enjoyed it. I hope you learned something. Like I said, when I do the free webinars, I try to make sure I'm actually giving you knowledge, making sure it's worth your time to come here and listen to me. I appreciate you all coming out. I know we have some more great speakers coming up. Dan, if you want, you can go ahead and take it away from here. I know there's still a couple more speakers that are due to go. I'm pretty interested to hear what they have to say. Glad you like it, Rob. Do you wait for the trend line to break before entering the trade, or do you wait for the bar to close? You enter on the break. You don't wait for the bar to close. For each future, you have suggested timeframes to stop from false signals in your trading. Craig, kind of, but I don't really, it's not that I say you only trade a 5-minute chart in this market. No, it's, if you ask me in the trading room, I'll say, this is the correct time frame to use, or here's the setup. I'll point out the setups. The way that, this is how I run the trading room, okay? I find all the setups for us. Okay, you want to see the list of futures I trade? Here you go. Like I said, if it's a futures market, if you trade futures, I can almost guarantee I trade one of the ones you trade. These are the currency pairs we follow. If you have one you really want to follow, we can add it. These are the equities we follow. The way I run the trading room is I point out, okay, here's your break point. So for example, with gold today, you can see here's the line. So I pull this chart up and I say, if it breaks below 1191.70, it's a potential short. So then you can place your orders down below 1191.70 if you want to take that trade. I don't take all the trades I call out. It would be impossible. Too much to run the trading room, answer questions, and trade everything. Yeah, Johnny, you can. Send an email to support. Again, if you need help with anything, support@ValueCharts.com. Support@ValueCharts.com right here. Again, it's ValueCharts.com/naked for the naked trading workshop, and trading room trial $7. ValueCharts.com/go.